And things are looking up for Mills Corp, the shopping mall developer, which lost more than half of its market value this year. They secured financing for its Meadowlands Xanadu project just earlier this week. But the Wall Street Journal, citing a lawsuit filed by the former chief executive, says the company disregarded numerous warnings from its auditor, Ernst & Young, over flawed accounting practices. Our next guest recommends shorting Mills Corp stock. He said that we should do this back in January of this year. He's Joseph Parnes. He writes the Shortex newsletter. He's also president of Technomart Investment Advisors. And we've got Rob Morgan, who's also still with us, to talk a little bit more about what one should short. And Joseph, let's talk a little bit more about Mills Corporation. Why was this a company at the beginning of this year that you thought things are not looking good?
I think the project of the Xanadu was sort of an outline to us, and of course the housing market was coming down to begin with. So being in REITs, as they were, it gave us the signal. We normally like to pick up the stocks to go short once they sort of going over the crest. That's why we started doing it in January of this year, around $33. So the alarming sign for us was just a slowdown of the REITs.
Now, of course, earlier this week they announced that they got their financing. The stock shot up about 15%. Did you short it up at that level again?
No, we just recommended shorting it last night to our viewers after this kind of a rebound. We normally find these rebounds to be nothing but short covering by the institutions, and the problem still exists. The project that's supposedly to be taking place needs a lot of time, needs due diligence, and I do believe that once they go through that process, the subject probably may not go through. In addition, they are issuing 4.5 million shares of, 450 million shares, something like that, 4.5 million shares, I'm sorry, in a part of the sort of a contribution to the capitals and, of course, KMM. And for that reason, I think this is an opportunity to go short again.
Okay. And another company, who else are you recommending that people should be short here?
Well, in this market alert that we just put out, we zeroed in into, for example, ocean overseas ship holding, which is OSG. Again, we're going into the energy part. There is a slowdown in the economy. Normally, when the slowdown in the United States economy, that normally filters down to the world. So when the demand is down, the price of the oil will fall apart, or at least will come down. The reason that the price is staying a little bit above the prices that it is right now, mostly in geopolitical, and of course there's a tremendous power behind it, that there is some demand in the marketplace. But the first thing that will be hit is not the energy stocks itself, but the suppliers or the carriers. The tankers will be the one, because the bulk rates will fall off, the charter rates will fall off, and this is a good stock to consider to go short.
Joseph, are you expecting a recession to evolve? Is that part of your thesis here? Or,
it's very hard to really determine recession, but the market is telling us something. The market is telling us that this is a slowdown, this soft landing, so to speak, may not be a soft landing and maybe a hard landing. So you have to go with the market. You can see that the flow of the money is really exiting. And another thing I wanted to add also on the short candidates, we normally look into the institutional holding. Is almost 70% holding of the OSG is held by institutions. Normally, when the slide comes in, they're the first one to go to the exit door. And you want to really short the stocks that are really being held heavily with the institutions.
You made a lot of money on shorting Mills. Another name that you've shorted is Hansen, and you made money on that as well. How do you know when you're getting you're on the verge of getting too greedy? What's the signal to take the short off?
We really try to treat shorts very much just like long. Granted that on the shorts, the longer you stay, you're still going to pay a short-term taxes on it. But we don't let the rebounds within it to really frighten us. The best way to make money on the shorts is to select a company that the fundamental has deteriorated for some reasons, and then technically is also deteriorated. Hansen, that you just mentioned, technically speaking, created what we call a gap from 50s to something like about 30s or 35s.
Technically, in terms of the stock price.
On the stock price, right. So normally if you have something like that, for it to come back, it has to fill up that gap.
And there's a gap that we're looking at.
And there is a gap down there. That's it. So for that reason, you probably will see that there will be a rebound, but the institutions are waiting for that. They are seeing that fundamentally this company is not going to have the growth rate that it had before. So therefore, as soon as there's another drop, they exit with it as well.
Joseph, we actually contacted the companies that you recommended shorting just to see what they say about this. And Hansen, for one, actually the only one that returned our call that sent in a statement. Their vice chairman, Hilton Schlossberg, wrote that Mr. Parnes' view appears to be based on his own technical analysis without regard to the fundamentals of the company and of Hansen's actual business and financial results. He said that his comments are in conflict with the views expressed by respected analysts, including those from firms like Goldman Sachs. Joseph, how do you respond to that? You've got a lot of the street that's recommending buying the stock. You're looking at a stock that is up 180% in the last 12 months.
That's very correct. That's very true in what he says. Again, this is his comments, but again, this is a very good candidate, technically speaking, for the shorts. Normally, the trend has shown, maybe not 100%, when the stocks go up steeply up as it did with Hansen, and then when they split the stocks, that's the first sign of exiting by many institutions who feel that they have saturated their prices and they are exiting. We try to follow that pattern when they do it. Stock split in June, 4-1.
4-1,
and since
right.
the split, the stock has gone south. I wouldn't be surprised that the fundamental may be strong in their judgments, but technically speaking right now, the market shows that it's going south.
Joseph, thank you very much. We appreciate it.
You're welcome.
Our thanks to Joseph Parnes, president of Technomart Investment Advisors, and we're going to be right back, everybody. Please stay with us. We're going to have more with Rob. We're going to talk a little bit more about small caps next.